So you were the reason, you reached out to me and asked for me to have this space. And so that is why we are here tonight, Brad. So we're going to be going over a few different earnings. And so I'd love to have you maybe start off with one if you want, and then we'll go. I know it's the middle of the night for From Value, so we'll go to him sooner than later. But if you want to give Brad maybe just some initial color, and then we can kind of go into the deep dive.
Absolutely. So for me, the two main focuses were Upstart and SoFi. So I know we're going to talk about Affirm and Coin. So really excited to hear how they did, but I don't actually know a ton about them, to be honest. But just a really high level, I guess, opinion on how both quarters went, starting with Upstart. So they beat expectations again, just like they do every quarter, by 9%. So a little smaller than most of their recent beats. 18% sequential growth. Added 6 new banking partners for 24% sequential growth. Car rooftop dealerships growing 46%. So I mean, the momentum is really strong, and the numbers are great. And I'm sure people will talk more about that. But one of the things that I found the most bullish in the report by far is last quarter, Dave Garrard was the CEO of Upstart, was kind of telling us, yeah, there's a partner that has now dropped the minimum FICO requirements, and there's another banking partner that might kind of dabble in doing so in the next few months. And not only did another partner follow suit and eliminate these minimum FICO requirements, but 2 additional banking partners, so now 4 out of Upstart's 31, have done so. And I mean, that's pretty staggering for me. So the bear case for Upstart is anyone can do this. They're not doing anything special. Banks can just do this themselves, and there's no moat and commodity and all of that, which I don't agree with. And I think this provides direct evidence of these 4 banking institutions who know the loan market a heck of a lot better than me and everyone else in this chat room are abandoning the key variable that they've been using for the past several decades in favor of the algorithm that Upstart's built. But I don't want to talk too much about Upstart, because Chris, I know, is going to have a ton of awesome stuff to say about that. So I'll just briefly run through SoFi's as well, which another really strong report. So 11% top line beat, really good. Product growth over 100% for the 8th consecutive quarter. They even gave us updates on the actual call that member growth went above 3 million already in the quarter, which was their target by the end of the year. So really bullish stuff there. Product additions are continuing to greatly outpace member additions, which that means the cross selling is happening, and this one-stop shop that they've been trying to build is actually working. Margins, EBITDA net income came in well ahead of expectations. So did the guidance. I will note that, so some people are talking about the sequential net income margin improving just vastly. And I will say that last quarter net income margin was hit really hard from a change in the fair value of warrant liability. So the apples to apples comparison, it was pretty flat. But honestly, that's fine. I mean, SoFi now has a really strong balance sheet, and every single demand metric is outpacing prospects. Sorry. So I think they should be leaning into growth, and they are not optimizing for net income and adjusted EBITDA right now. Still adjusted EBITDA positive, still a 34% contribution margin, but just good to keep things in mind there. Other things that I found interesting from the call, SoFi enjoyed a 65% sequential, not year over year, sequential increase in cross-buying volume from its members. So just another sign that this 3-pronged monster, the Galileo technology API services, the lending business, and then the financial services business, so the product that's trying to compete with Cash App and Venmo, are really the cross-selling is pretty staggering to me. And I want to just say that I'm saying really positive things about both of these companies. And if there were bad things to say, I would be telling you. So one of my tweets today was ripping on Tattooed Chef for delaying their earnings call. And so just want to let you know, I will say mean things if there are bad things to say, but these were 2 truly remarkable reports. Personal loan NPS, despite the fact that they got a large boost in volume in their personal loan segment, set all-time highs. And this whole diversification of the product suite in a time where their core segment, their original segment, their most mature, highest contribution profit segment, their student loan business, is 50% off pre-CARES Act volumes. So I mean, they still raised guidance despite this, and just just or a couple more things to highlight. Incremental EBITDA on new revenue. I love when companies disclose this stat. It gives you a great sense of how profitable the very newest of businesses, and that's north of 40% for SoFi. So just showing you that despite the fact that they are growing rapidly and the margins are good, not great, but improving, there is a very long runway for margin expansion that they plan to enjoy over the coming years. So just wrapping up on SoFi, they took a $52 million revenue hit from Apex Clearinghouse revenue, which was an acquisition they made, not contributing to 2021 revenue like they thought they were going to, and then a $40 million hit from this CARES Act student loan moratorium extension, and they still raised guidance, and they're still thriving. So it's encouraging to me because, or I guess it's exciting to me because their core segment, what contributes most to their top and bottom line at this point in time, again, is 50% off of normal volumes because of this extension of the moratorium, and they're still performing. So just to think about what happens when this normalizes, when they maybe get their bank charter, which should be coming any week now. It's exciting. So the two share price reactions couldn't have been more different. Upstart tanked, SoFi spiked. I'm really not focused on that. The two reports were really good. So to me, that is just Mr. Market being Mr. Market, and sentiment and expectations taking over. I mean, the short term over fundamentals, but they were two really strong reports. 2 thumbs up from me. Thank you, Wolf, for letting me create or push to do this space. I'm really excited to hear about these other 2 companies and more about Upstart. So yeah, those are the 2 overviews, and I will pass it on to the next speaker.
100%. And thank you so much, Brad, for, like I said, reaching out and asking that we do this. I see some great friends of ours in the crowd, so appreciate them for tuning in. Some people that I haven't seen on Spaces in a little bit, so good to have you in here. And in addition to that, I believe this is also being recorded. I'm pretty sure by @LaLaLovelyTrade. That way I can upload it afterwards to YouTube, to Spotify, to other places so that people can listen in if there was something that you wanted to go back over. Now, I wanted to move real quick to Chris, because like we mentioned, it is a little bit late by him, and would love to hear your in-depth analysis on Upstart earnings.
Yeah, well, Brad already told a few important things, I think. The stock price was down quite a bit, but I mean, I don't care that much. I mean, this is a long-term holding, and if you look at the results, they were really good. They were really good, and it's important to to make the distinction between the stock price reaction and the real results. A lot of people, are scoreboard analysts, just looking at the stock price, at the chart, and then looking for an explanation, any explanation, just to to explain if a stock goes down that much. I think it was quite simple. The expectations were extremely high, and they beat the estimates quite convincingly. But probably people had I had seen other numbers thrown around before, and then those were not met. So it's but again, if you look at where we were with Upstart, at the beginning of the year and where we are now, it's incredible to see how they have evolved. They have raised their guidance again for the year by, if I remember well, about 15% again, after having raised it by 20% before, and 15 also, I think. So it's really it's really crazy to see that, and to to see the evolution of this company. And of course, it's still a very young and early company, and that means that there will be quite it will be a very volatile stock. But if you look at what is underlying there, It's really great. It's a great team. So Dave Gerard is the CEO, and the three founders are still there, and a councilman. So she's more HR, and Paul Gu, and he's actually the wizard, the tech wizard, who's responsible for the AI. He's a Teal Fellow, and the three work together very well. Dave Gerard, probably people know, has a past as the head of Google Business. So the apps actually, so Google Suite or whatever you want to call it, and he's a very smart guy, and I think to the core, if you look at what Upstart is doing, is it's credit accuracy. That's what Dave Gerard calls it, credit accuracy, and that benefits everyone. It's better for banks and for consumers, because if there are fewer defaults, if we take a loan, um, we always have to pay for people who default as well, right? Because that's a bank still has to have a profit, so it means that if there are defaults, it has to be redistributed among the other loans. And so with their AI, um, Upstart can make that much better, much more accurate, and that's why it's passed on to both the banks and consumers. And if you look at, I mean, I'm talking quite general here. Why? Because if I look at this quarter, I just see the same thing again. What I mean is, um, Upstart just proving that its model works. And as Brad already said, four banks now just have done away with the FICO score and just use um, Upstart. And I think that's already something. But if you see what's going on, and I hear people talking, oh, everybody can do this, everybody can set up an AI, and that's correct. But not everyone can set up a great AI, and that's a part of what Upstart is doing. This um, a real great AI. It must be, and that's always the problem. Of course, AI is a black box. You cannot see it. They will not explain to you what the most important factors are, because then they're giving away their product actually. So or a part of it. So what they do, what you can do is just look at the results, and those results, really confirm that the AI that Upstart has is not just talk, as in a lot of companies. AI is one of those buzzwords. It will be probably replaced by the metaverse right now, but it's one of those buzzwords, and it's there's good AI and there's bad AI, and I think just like with everything, there are good companies and bad companies, and there are great companies, and those great companies are a minority. If you look over the long term, I think it was 6.7% of all companies do really really great over long term on the stock market. I think with AI it will be more or less the same. So, um, um, you know, probably less than, or probably a single digit percentage of AI will be real great AI. And I think if you look at the results that Upstart has it, and if someone else, let's say a big bank tries to make its own AI, it has to be at least as good as that of Upstart, because if not, and everybody else is using Upstart's AI at a certain moment, You know, the big banks will be undercut. They will be undercut, and they will have to come up with something. If they have their own AI and it doesn't work as well as that of Upstart, people will still go to their competitors who have that AI, and that means that banks are really cornered now in that way. Big banks even too, in that way that they have to either come up with their own uh, great AI, which is not that simple because it's just a division in a big bank right now. While Upstart is really focused on only this, or they have to come up with some competitive advantage over the others. And of course, it's still very early right now, just 31 partners. But if this continues and this goes on in the future, and more and more and more credit unions and banks join, the Upstart platform, I think there will be a lot of pressure, even for big banks, to do something because if they are undercut on the prices, I mean they have a problem in the end. And of course, this is not something for next quarter or next year. Even this is long term. But I'm investing for the long term, so that's how I think. Um, and I think this is underestimated by a lot of people. There is time pressure even for the big banks to come up with something really good. Um, and Upstart is, I think Dave Jarrett said that he would be very surprised if um, be working with hundreds of banks in a few years. So, I mean, great. What you will also see is that Upstart is going to go to other products. By the way, one of the great things about Upstart is, yes, you can go to upstart.com and go there, but it also has an API. So it means, just a code, and uh, banks can integrate that into their own platform. It's with their brand on it, and in that way, Upstart really is a partner for banks. It just helps them, and I think that's very important as well, because the banks have the feeling that they still have control. It's on their own website, and they got the loan, so it's working with the banks. Everybody has an advantage there, and that's a win-win-win situation. So Upstart, consumer, and banks, and that's a very powerful combination. I think I'm looking at time here. I think I'll better stop right now. But if you have questions, go ahead.
Yeah, I'll just throw one question over to you. We've definitely talked about this for a bit today, and I see Jonah in the crowd, and we chatted a bit on his space as well. So it doesn't sound like you're really worried about the competition, which is, one thing that, of course, we look into a sustainable moat. And having gone over their AI, you seem pretty confident in it. I guess my other question would be, looking at this from you're looking at it as a long-term investor with a long-term perspective. Is there opportunity? Did you add to your position on this drawdown? Is this something where somebody, was looking to make perhaps a starter position? Just where do you feel the stock is, I guess, in relation to, where it's going to be in a year from now?
It's always hard to predict stock prices over the short term. It gets easier the longer the period, and that's why I always advocate to invest 3 years and more. And will Upstart's stock price be higher next year? I think so. Will it be higher in 3 years? I'm really convinced it will be. So it's not so simple to just judge from a stock price perspective. I never go all in as well. I always scale in into positions slowly over time. Sometimes that's an advantage. Sometimes it's a bit of a disadvantage. With Upstart, it was a bit of a disadvantage to scale in slowly. But still, I have a substantial position, and I'm happy with that. I add money to my portfolio every 2 weeks. All my subscribers can see that, and what I do, what I buy, and probably I'll add a bit to my Upstart position. So that's I think next week. So yeah. I think this is a good opportunity to start to scale it.
Awesome. Well, thank you so much, Chris. I appreciate you staying up late with us. Feel free to hang around, and if you want to make any points, to any of my speakers, if you want to make points, there is that raise hand feature, which works really well. Cool. Well, thank you so much for the insight there. Real quick, because I know that he's a busy man, I appreciate him popping in. Doug, how's it going?
Hey, Wolf. How are you?
There's been better days in the market, but here with my FinTwit family, I'm living the dream.
Yeah, you can't live this market one day at a time, man.
Yeah, well, tell that to my anxiety.
Right? That's the truth.
Yeah, well, it's fair. So I guess real quick, I don't know if you wanted to weigh in, but I did see you popped up. Did you have any thoughts on this week's earnings, overall market sentiment? Anything you wanted to add?
I think the only one I was out of the four in your title that I was paying attention to was Coinbase. It was kind of interesting to see how publicly traded company in the crypto space fared. Now that we have a real big one to look at, I don't know. I thought it was just interesting to see how they would be booking revenue based on transaction volume for the quarter. I don't know. It kind of makes me want to take a position in it, to be honest with you. I feel like we're just getting started as far as decentralized finance goes. And you can look to Coinbase as being one of the first to really get in there in a big way. So, but outside of that, no, financial planner, it's kind of boring stuff. We don't obsess over earnings, not for any bad reason, just because it's not what we spend our days doing. So I'm usually learning more about it from you guys than what I'm reading during the day.
Yeah, that's definitely fair. And, good points there with Coinbase. That's one which we're certainly going to dig into. Definitely some people on here that have done their research, I know, into it. I thought it was interesting that they were going ahead and putting a lot of that money into crypto themselves. And, I just consistently hear about what their platform's doing, how they're intriguing. I guess they're a really great place for bringing, I think, beginners into it because, of course, there's platforms that you can go out and buy crypto on and start doing decentralized finance and start doing staking. But I think it's a lot of it comes down to stuff like your user interface, your brand, relatability, customer service, things like that. So do you see them kind of nailing a lot of those points?
Yeah, but I think those are minor points relative to what they're really in for when it comes to regulation. You got a little whiff of it when SEC said, "Hey, if you put out your yield product, we're going to sue you." Like, but why? We're looking for guidance, help, and it definitely shows you that they might be that continual target for dealing with. And I don't even mean this in necessarily a bad way. It's just now that regulation and regulators are entering the decentralized space and the crypto space, half half of you will think it's conspiracy and protecting the banks. There might be truth to that. But certainly where there is definitely truth is in protecting consumers, right? Before you open the floodgates to something brand new like this to everybody and offering yield products or money market like products and stuff like that, you're obviously going to have to protect people. So I'm sure half of you would also agree with that. But so I think for the challenges of Coinbase, they'll probably have it on the regulatory side, but on an opportunity side, the signups into what they're going to do with NFTs. And I actually hold NFTs as such a big advancement in what we're doing in decentralized finance. I think most people are like flipping JPEGs. It's far, far deeper than that. And they're looking to launch end of by end of year, and the signups, what, 3+ million, if I'm correct. That's massive. And if you're OpenSea, you're like, uh-oh. And I think we're not even scratching the surface on utility. When we say utility, it's almost cliche to say my PFP project has utility. It's like we're not even talking about the utility in the way that they're phrasing it today. We're not even able to be fully decentralized. So I think that probably is Coinbase's biggest current opportunity, along with successfully navigating regulation and coming out with yielding products like they clearly want to do. So when I say I'm kind of looking at the price and saying, this is maybe, I'm okay with, pre-IPO prices today, because I think it's still so early and they're pretty much the biggest in the space and going into the right areas. That's my piece on Coinbase. And the other one that caught my eye in the header here was SoFi. I remember 5 or 6 years ago being contracted by SoFi to give financial education, like speeches, if you will, or to provide a topic around personal finance. I went to 5 different cities over the summer of 2017, I think, so 4 years ago. And this was like back, obviously pre-public. This is back when I think Mike Cagney was CEO, before Soto came in as CEO from Twitter. And it was actually good times. And what I was noticing is, obviously, they're able to get that wallet share, get their user base built on the student loan refinance program they were running. And then to watch them go into asset management and banking products. And they actually put on a really good demonstration of how to get wallet share. I think they're a really good lesson in that. I'm not surprised to see that they're doing well in almost every aspect of their business. They had a really good foundation. It's interesting to see, and awesome to follow and have some like personal experience with the company from many years ago. I know when the CEOs changed up, it was probably frustrating for employees who had been there for a long time expecting to go IPO, and Soto comes in and is just like, "Yo, we're pausing any plans to go public for a while here," and that has to be very frustrating for talent that's at the firm. So I think it's been many years since that, and they're clearly firing on all cylinders here. Very interesting. I'd love to do a little more research as to what their user base looks like, how they were able to penetrate wallet share for like customers that originally came in for student loan refinance 3-4 years ago. How many of them are continued customers of SoFi, and how many other products they managed to get cross sold, with quotes around it, into. And then I guess if you got a firm up there, I don't know if I have the energy to go down the road of buy now, pay later companies. And I would imagine that someone's emoji was laughing. I actually just spoke to, trying to remember who it was, about buy now. Oh yeah, it was some new media outlet. They wanted to do a story on just the hype around buy now, pay later, and what's going on there. As a financial planner, it's hard to think that there are a lot more positive things out of buy now, pay later companies than than negative things, right? Like, do you need to be financing a $75 pair of jeans or a $200 pair of jeans? I don't know if the emphasis on controlling cash flow needs to be done on the smaller consumer based items, as you're going to have more impact focusing on larger expenses, your rent, your transportation costs, how you educate yourself in the student loans, and things like that really have impact. So I don't know, just kind of fatigued from commenting on companies like that. I get it. I think a lot of the people that use it aren't really using it for the right reasons. I would be delighted if someone was like, "Yo, you're wrong on that, and here's why," and some data to back that up. But I don't think I am. And no comment on Upstart, other than I know what it is, but I don't really know enough about the company, its financials and earnings to really comment on that. So those are the 4 you put out there. I can't really think of Any other companies I want to talk about? I always appreciate you got me up here. I hope what I said was helpful for someone. I'll answer any questions that you got, but otherwise, really appreciate it.
I definitely found the coin stuff that you talked about insightful there, and also the SoFi with their background. That was really interesting into seeing the change. I didn't even realize, I haven't done that, I guess, that deep dive into the backgrounds of the CEO change and then the decision to not IPO at that point.
Really weird that
But yeah,
really weird that I even know that. Nor, on any given day, I guess you just, work in the financial services industry long enough. And, I focus on my demo on millennials, and SoFi was very, very much in the same, like if you created a Venn diagram, there was overlap. I mean, I was talking to some of their, SVPs and people who were trying to get their wealth management business launched, and actually was approached to be a part of that. And it was flattering, but there was no way I was walking away from my wealth management firm, which was, really getting, I guess, some traction and, its legs. And I settled on doing some speaking engagements. I figured I'd get to go see some cities and some friends and get paid to do it. But yeah, that's the only real reason I was able to follow their story or give you some background. Yeah, their old CEO unceremoniously left the company. Y'all can read about that. I know it's out there. But yeah, it was an interesting experience. Happy to share it with you guys. Interesting to see them succeed. Generally happy to see them succeed, because I know there's probably a lot of employees there who stuck it out and finally got paid via SPAC.
nothing better. We just did our SPAC space 2 hours ago. We didn't really talk about SoFi, but that was an interesting one. Cool. Good stuff there. And I love the boots on the ground information that we can get. Anything else you wanted to add, Doug?
No, man. Hope you're all doing great. I mean, it's a fantastic room. Love that you do this. Looking forward to an 8 and 9 o'clock meeting tonight. So off I go. Back to the grind.
Have fun. Hope the kids stay asleep.
They if they know it's good for them, they'll stay asleep.
That's what we love to hear. All
Later,
right.
man.
Bonafide Wealth Management. Make sure you're following Doug, everybody in the crowd. One of my favorite people on here.
What up? All right, bye
Awesome.
guys.
Take care. All right, Gerg, we've been chatting in the DMs. What you got?
Yeah, what's up? So let's start with UPST. That's the first name here. I think UPST selling it at 400 was the most logical move. When you have random Twitter accounts going on CNBC pumping a stock that they have no clue about, that's just the top. And this case, that was the exact date. If you go and chart that out, that was the last day. It was about 400. If you look at my tweet, right, that's what made me sell. I sold it Monday. The video came out, I think, on Saturday, and everyone on Fintuit sold it on Sunday. So if you see people going on CNBC or other legacy media companies with tens of thousands of followers, and when people ask them what does the company do and they have no clue, that's when you usually sell. Yeah, I'm being serious. Yeah.
No, I know you're
Next
being
stock is-
serious. I just laughed because Mark Minervi blocked me for mentioning that.
Yeah, he blocked me too. I'm making excuses then. Next is SoFi. I love SoFi. Anthony's a great guy. I don't know why he left Twitter. If he was still there, he would be the CEO, and Twitter would be $100 billion company instead of 50 billion. Jack is a trash CEO. He spends most of the time in a square. So let's not talk about that. But SoFi, great numbers. I'm still waiting for the bank charter to come out. Usually it takes a year, and with that logic, it should have been out the previous month, but it hasn't. With that, I think SoFi might hit $30 before the end of the year. But my personal price target is $40 for next year. I won't be selling under that. I did play the earnings. I hedged my earnings because last earnings they had a big mess, and the stock was down 20%. For that, they decided to sell $25 call for January. I got paid $1.40 for that, and with that money, I bought weekly $20 puts for free. I mean, for that, my max loss was 5 cents per share, and my upside was $5. So almost a 10,000% risk to reward ratio. But I'm in so for long term. The next stock, Coin. I like Coin, but I wouldn't own the stock at these prices. I don't want to talk about that. But Affirm, I did play Affirm. I think I talked to Wolf and Stock Talk about playing both sides. I sold my puts on Monday. They were up 80%, but today they were up 250%. I paper handed them. I sold half of my calls for a loss, but the way this has been running, it should open up 300%. But I do think Affirm is very, very overvalued. Even at these prices, same as UPST. And I might buy UPST at $100. I am definitely not buying the dip at these prices. So keep in mind, if you see random Twitter accounts going on CNBC, Bloomberg, talking about stock they have no clue about, just sell. Think later.
Advice for life. Awesome, Gerg. Appreciate the insight into those. So just running through those. Yeah, you did call it. You do have that pin tweet up there with Upstart. We did chat about that. So listen, props to anybody that can bring receipts to a space. I always respect that. And then SoFi, good points there. That's something which I think, I've been in with you for a little while, and you were kind of putting in buys towards the lower side. And interesting to hear that $40, potential price target. And against the audience, none of this is financial advice. Please do your own due diligence. Just talking through our thought patterns. And then coin and AFRM. So I know with AFRM you were playing both sides of that, and that's all over your timeline. So yeah, there's plenty for people to dive into there. Anything else you wanted to add?
No, for now I'm good. Thank you though.
Awesome. Okay. All right. So I wanted to go real quick because this is an important one. So Evan, my lovely co-host, Stock Market News, spent a good amount of time this week really diving into coin and did like a full write-up. And if you look at Bullish Rippers, which is on here, he posted his timeline as well as the Bullish Rippers newsletter, which he does write. So you see it's the Green Raccoon account up here. And although he probably won't go through every single little bit of it, I'd love to hear some in-depth analysis on coin. And if anybody wants to take it even further, you could definitely check out his newsletter. But Evan, floor is yours.
Thank you, man. I appreciate that. I pinned it at the top for anyone who wants to read in while I'm going. I think the biggest thing to understand with this quarter first is take a look at the stock price and how it's performed over the last month. We've had a huge run up, and the real cause of that has been the trading in SHIB coin, whatever you want to call it. And I think that the big thing to note with this quarter is almost all of the impact from that is not going to be felt this quarter. It's going to be felt next quarter. So SHIB really only started to move September 30th, October 1st in this most recent rally. And this was the quarter ended September 30th. So a lot of the effects from that aren't going to be felt in this quarter. It's going to be felt in the next quarter. So it's kind of an interesting dynamic here where the reason the stock price has been moving up, we get all this information and it kind of really has no color around that. They did add a little color around how October was, and I think that was part of the reason we saw a small bounce back today, but I'll get into that in a second. So first of all, about 88% of Coinbase's revenue comes from transactional revenue, so trading when people buy and sell crypto. The remaining 12% comes from subscription and services revenue. I think Doug or other people talked about this earlier, whether it's staking or custodial fees or other revenue sources, interest income. The biggest part of that segment, which is growing pretty fast, is the staking part. It's the blockchain rewards part, but the biggest segment of that is staking. And they were talking about the Ethereum 2 staking strength being a big part and being the big aspect of the growth in last quarter. But nevertheless, they still get 88% of their revenues from trading in crypto. So this company is still, how they're going to do quarter to quarter is extremely dependent on the price of crypto and the volatility of crypto. So it's hard to kind of look back now because we're talking about between 4 months ago and 2 months ago. But during that time, crypto was moving lower, volatility was a little bit down, and that caused the quarter to not be as great. So the numbers were definitely below. They missed expectations. They missed top and bottom line. Nothing too serious. The revenue number was a little bit more of a miss. They missed by about $250 million. They reported revenue of $1.3 billion. Nothing too crazy. I think the biggest thing with Coinbase the biggest thing with me for Coinbase at this point is that it really is just a play on crypto and how it's doing until they can smooth out the revenue and make the subscription revenue a larger part of their total revenue source. They're always just going to be dependent on how crypto does. So I think that for the next year or so, that has to be your first place to look when you buy a stock like Coinbase. But there is definitely a lot of potential to grow into other aspects and other more sustainable, more, revenue sources they can count on over time in that subscription and services revenue. There's a couple other little cool facts that maybe I should have known before, but I really didn't before I did this deep dive. So Coinbase is launching their NFT platform, as Doug had said. They're at right around 2.5 million people on the waitlist. One thing that I would caution is that it is really easy to just make another email and get on this waitlist. So I don't know exactly where the number is. I don't think it's 2.5 million. I have 4 emails on the waitlist, so I could see where the number was at. So I imagine other people can do that. But the reason I got off on this tangent is because I didn't know this, but Coinbase actually invested in the seed funding round for OpenSea. They've invested in a couple other companies in this area as a part of their venture strategy, but they invested in companies such as BlockFi and Uniswap as well. So they have a wide, diverse portfolio of investments. I believe that they had over 100 investment companies. I did also want to bring up one more thing that Doug had talked about with regulation. So Coinbase did touch on regulation on the call. They talked about how because they are one of the largest players in the space, they're going to be the poster child for this stuff. So whatever I forget the exact product Doug mentioned up, but there was a product, a yield or an interest product they wanted to launch, and they got rejected from it. But there are multiple companies in the U.S., smaller companies that have this type of product already, and Coinbase just wasn't allowed to do it because they're the biggest and they get the extra scrutiny. They talked about a big thing that they want that would simplify the regulatory process. Is right now they talked about how jurisdiction for crypto is spread across so many different departments, and they were hoping or wishing that it could be more centralized to 1, 2, or 3 or something like that, and make the whole process simpler. So right now it is a little bit of a cluster F, if we want to say it, but there is that leads us to some potential for improvement there. Quickly, I think I touched on this, the October numbers being stronger than before. So they are, if October was to keep up and this was to be the entire Q4, it would be all-time records for them. They reported October monthly transacting users of 11.7 million. That's above the previous records of 8.8 million and above what they just reported at 7.4 million for this past quarter. And then total trading volume for October was $186 billion, which is more than half of the total revenue in Q3, the total trading volume in Q3, sorry. So, they are on track to definitely destroy this past quarter as far as trading volume, and they are on pace to break all-time records in that aspect. So the next quarter is going to be strong for Coinbase. It's just a matter of how much of it is priced in and how much of it will be priced in at that point. Pretty much all the effect of SHIB is going to be in next quarter, and we're going to see a lot of the aspect to it. Anecdotally, I imagine it was a really, really big deal for them. Like, I don't know if everyone saw this, but Coinbase literally became the #1 app in the App Store in October, and now they include SHIB in their official titles. Like Coinbase, when you go to download it from the App Store, it used to say trade Bitcoin and Ethereum. Now it says trade Bitcoin, Ethereum, and SHIB. So I think that as much of a whatever that is, I think it shows that it is a big deal for Coinbase. So I think that is a big aspect in their numbers. It'll be interesting to see how that does going forward. I know it has had a pullback, but if that coin or other similar altcoins that aren't on a lot of platforms but are on Coinbase, I think that's the type of stuff that can be really powerful and bring an outsized return to Coinbase, because when Bitcoin and Ethereum move, every single exchange is going to see the effect from that. But when something like SHIB moves, it's not on Robinhood, it's not on X other platform in the US, Coinbase is going to see an outsized return. So I would be on the watch out to see if any of other similar altcoins have such a move in the quarter. But yeah, I think that's a pretty good place to where we're at.
Perfect. Love that insight there. Yeah, definitely keeping an eye on coin. I don't currently have a position, but we've traded a little bit of options on it. I definitely wouldn't mind getting in. And this pullback here could be an opportunity. So gonna mule over what we discussed tonight, and we'll get into it. Now we're very honored to have Jonah back on here. I know your time's limited. We did a full space earlier. Jonah, I will say, I have 25 minutes recorded of that space. My intern was recording, and unfortunately, I don't know what's happening. I gotta crack down a little bit more on these interns and get these spaces recordings. But I will upload what I did get.
Did you get the first part of it with Upstart?
I gotta listen to it real quick and see what I got. But whatever, this space is recorded, so I'll also upload this one.
Okay, so let me
Floor is yours.
yeah, I mean, let's talk about Upstart. I mean, obviously it's my largest position. It has been for a while. Today was pretty ugly for me. My worst day in 20 years of investing and trading. So I felt the pain with a lot of people. But I mean, to be honest, I have just as much conviction after that Q3 report from Upstart than I did going into it. So for anyone that obviously Upstart got smoked today. The expectations were very high. I was looking for probably 258 to 272 million. 258 would have been 33% quarter over quarter from Q2 when they reported 194 million. There was a lot of data out there to suggest that the number would have been over 258, between website visits to Credit Karma to Upstart, Trustpilot data, all sorts of stuff. So, I overestimated it. I got a little overconfident, and I took an oversized position into earnings, and it obviously didn't work out very well. But there was still a lot of good news in that quarter. They did report, decent, more than decent quarter over quarter or sequential growth of 17.8%. I think a lot of companies out there would love to have 17.8% quarter over quarter growth. I know that Cloudflare is a big favorite of many, and they're not even doing 17.8% quarter over quarter, and they're trading at 90 times sales. And Upstart is probably trading at about 25 times sales. If you believe that they're going to come in somewhere around 280 million for Q4, that puts them at about 826 for the year, which is about 254 to 255% year over year growth. So, Upstart is trading at, let's call it 25 times EV to sales, with 255% year over year growth. That $282 million number that I'm expecting for Q4 is about 23 or 24% quarter over quarter growth. They are guiding right now to 260 for the quarter, which would be about 14% quarter over quarter growth. But they guided up 8.5% for Q3, and they came in at like 18 or just under 18. So, I believe that 260 number they're giving us for Q4 is very conservative. They're now in auto lending. They're adding one new dealer every single day, which is pretty impressive. They're up to, I think, 31 bank partners right now. There is rumors out there that they're doing something with Wells Fargo. Jim Cramer has alluded to it a few times. The company has denied it, but I think there's still something there. We'll see. I mean, if they reported something with Wells Fargo, who claimed that they were going to get out of personal loans a couple months ago, and then 2 weeks later they reversed course and said they were going to stay in personal loans, I can only hope that they're deciding to stay in because Upstart is is going to help them with their AI, digital first solution. So we'll see. That would be ridiculous news. The stock would probably move 15 or 20% on that alone, but I'm certainly not going to bank on that. I mean, the company still has incredible growth, incredible gross margins, contribution margins. Revenue growth was up 50% year over year. Loan volume was up 350% year over year. If they end up doing about 282 million in Q4, I believe with personal loans, auto loans, and then they have a couple new products coming in 2022, such as small business loans and micro loans. So micro loans is probably an $80 billion market, and I get there two different ways. One, the payday loan market is a $40 billion annual industry, and overdraft fees is $40 billion a year. And a true microloan product from Upstart that their bank partners could use would sort of, let's say, give them access to those two markets. So I think that microloan market, and then there's probably other uses besides just those two, but that's probably a, an 80 to $100 billion TAM by itself. Small business lending, I don't know if that would be like an SBA thing or not, but that's obviously a big market. And then home loans in late 2022, most likely, although they do have $1.2 billion on their balance sheet. just like they acquired Prodigy to expedite their entry into auto loans. I would love to see them do a deal for, call it $1 billion, half cash, half stock, to speed up the process of getting into home loans and mortgages. But with all of that said, I think that they can maintain something close to 20% quarter over quarter growth through 2022, which gets them to about $1.8 billion in revenue next year. If they come in at about $1.8 billion for the year, I think this is a $550 to $600 stock by the end of next year. Now, if they only do 15% sequential growth next year, that puts them at about $1.6 billion. I think we're looking at maybe a $450 to $500 stock by the end of next year. So, this growth story is definitely not over. There is a whole bunch of levers that they're going to pull, a ton of optionality left in this business model. They have 31 bank partners. They still rely heavily on Credit Karma. Hopefully that's going to start changing as these new bank partners come on, and they're now onboarding bank partners way faster than they used to. So earlier this year, it was taking, I think, 6 months to onboard these bank partners. Now they have it down to under 2 months. So, and then as they add auto loans and as these bank partners start to get rid of FICO scores or FICO requirements, like, I just think this stock is not going up, or is not done going up. So I'm loaded up with lots and lots of shares. I'm planning to hold all of those shares probably into Q4 earnings. I think this stock has a shot at getting back to like 330 or 340 before they report Q4 earnings in early March, or most likely around early March. So we'll see. Today was a bad day, really, really ugly, but I think I'll make that money back on Upstart over the next few months.
Awesome. I just double checked. I don't have it in the 12 p.m. recording. However, this one is being recorded, so we do have it in this.
Okay. So those are all like the big numbers, I think, with Upstart. I'm trying to think anything I left out. No, that's pretty much it.
Perfect. Do you want to touch on SoFi at all?
I haven't had I looked at the earnings report. I haven't had a chance to listen to the call yet. I mean, numbers look pretty strong. You had strong customer growth. You had growth across all their different divisions or product lines. I know Galileo looks strong. I think Galileo was up like 80% year over year. They're obviously doing a nice job of cross-selling products. They raised guidance, which I think is one big reason the stock was up. So, they didn't raise guidance after Q2 earnings, which is probably one reason the stock got whacked. And then also because they came in with a bigger loss because of one-time charges. I think people have started to understand that, the two big catalysts coming up in the next few months are the student loan refi business, which will come back after this student loan moratorium is over. So I think that ends in January. That student loan refi business should come back. That's probably at least $30-40 million a quarter of revenue that they can start banking on with very high, contribution profits or contribution margins for that business. And then the other thing, of course, is the bank charter. Now, I don't know if they talked about the bank charter on the conference call because I haven't listened to it yet. I'm going to guess that
no update.
No
Jonah.
update. Okay. Yeah. I mean, Anthony's a smart guy. I mean, even if he knows something or has an idea of the timeline, I don't think he's going to say anything. He's just going to keep saying that, they're in conversations with, was it the OCC and FDIC and I don't know what other, entities or organizations they have to deal with. But I think it's those two. I think it's FDIC and OCC. So OCC is the Office of the Comptroller, or currency controller. I don't even know. But hopefully, I mean, we're now, 7 weeks away from the end of the year. I don't know if it happens by the end of the year. I don't really think it matters that much right now. I think the question is how much of that is priced into the stock. It's just hard to know. If we got the announcement of the bank charter tomorrow, I don't think the stock sells off by any stretch. But I think there's a chance that maybe it's already baked in or priced in because everyone knows it's probably coming. It's just a matter of when. And I think just look at Lending Club. Like I mentioned earlier on Spaces, Lending Club has really accelerated their growth after they got their bank charter. I think SoFi has the potential to do something similar because being a bank gives you the ability to It lowers your cost of capital because you're able to lend out your own customers' deposits in the form of loans rather than having to have these financial products where you're basically borrowing money from other institutions in order to lend it out. And that's obviously going to raise your cost of capital by 2-3% probably. And that's a lot of margin to give up to some other financial institution. So being able to lower their cost of capital, offer better deposit rates, that gives them a lot more optionality. And I've heard that, I forget, I think this was part of the Q2 call. They talked about being a bank gives them a better, what's the right word? I think they can offer different sorts of credit card products. So how that ties into Galileo and whether or not that allows them to compete with Marqeta more, I'm not quite sure. So I need to figure that out, or maybe I'll reach out to investor relations, because they kind of hinted that once they became a bank charter, that would be good for Galileo, and they'd have more product diversification, I guess. And I have a feeling that they're going to go after Marqeta's business, but I don't know. Maybe I'm just making it up, or maybe I'm just being optimistic. But that would be somewhat interesting, because obviously, if we can see from Marqeta's results after hours, their business is doing really strong right now, and I think Galileo has a lot of those relationships that they'd be able to tap into pretty easily. So we'll see. I think getting that bank charter is going to be really interesting. I think that's the catalyst, that and the student loan refi business coming back in January. Those are the two big catalysts that probably push this stock to $30 in the next 6 months.
Sweet. I know Evan has a question for you as well.
Sorry,
Evan?
get into it. How to unmute. I don't know if you wanted to continue with that, but one thing that I know that you're really into, and it reports earnings tomorrow morning, is Celsius. Want to know if you had any thoughts, maybe anything you wanted to or were thinking or expecting into earnings, or let it come out tomorrow?
Yeah, I'll run through my numbers real quick for Celsius. So there's two ways to track the data for Celsius. There is, let me just pull up my spreadsheet. So there's the Nielsen data, which tracks offline sales, meaning brick and mortar, basically retail. And then there's the Stackline data, which tracks online, in this case, Amazon, because Celsius only sells online through Amazon. So in Q3, the Stackline data, as reported in the Monster earnings, because Monster actually reports all of their competitors' numbers, which is kind of funny. That's where we can get it from, since I don't want to pay for the data myself. But so Q3 Celsius grew on Amazon 95% year over year. According to Nielsen, they grew 192% year over year in brick and mortar. Ironically, they've actually accelerated that growth into Q4. So we got the first, I think it was 2 weeks of October, or maybe it was 3 weeks, and they were already doing over 200% year over year in October. So Q4 is off to a great start, but they don't give us full year guidance anyway. So we'll just have to wait until we get the full Q4 data before I put my numbers together. But if you use 192% year over year for brick and mortar, if you use 95% year over year for Amazon, if we assume that the mix is kind of 3-to-1 in terms of offline to online, and that is just sort of a guess based on what I've seen in previous quarters. It could be off, but we'll find out tomorrow how close that is. But if you kind of you add it all up, you get about 170% year over year growth. That would be for North America, and then international, I think they do maybe 20 to 30% year over year. So just split the difference and say 25%. They did 10 million last year international. So let's say they do 12.5 million this year or this quarter. Add that to the 72 million I think they do in North America, give or take, and you get about 85.2 million to be exact, which would be 130% year over year growth from Q3 of last year. Estimates right now from the analyst are 73.6 million. So if they came in at 85.2, that would be a 15.7% beat over the analyst. And like I said, 130% year over year. Now, the multiple's not cheap on this stock. It has pulled back in the last week and a half. So the stock did get up to about 108 a week and a half ago. It's now pulled back to the mid 90s. So we're going into earnings in the mid 90s with, I don't know if that lowers expectations or not. If they come in at 80 million, for instance, estimates are 73. If they come in at 75 million, I would expect the stock to probably sell off 10%. If they come in at 80 million, the stock's probably somewhere between probably flat. Hard to know. If they come in at 85 million, and show that sort of year-over-year growth and a 15% beat, I think the stock gets back into triple digits. So hopefully I'm right on my analysis and my estimate here. I'm really just using the data that's available, so I don't think I'm going to be off that much. I'm usually within 5% plus or minus. So we'll see. We'll find out sometime tomorrow morning. I forget when they usually report. I want to say it's around 7:30 or 8 a.m., but we'll see. I'm planning to go to the gym early tomorrow morning. I might even be at the gym when they actually report. And it's not like I'm planning to buy or sell pre-market anyways with the stock. So, this is a long-term hold for me. I did trim about 30% of my position last week when the stock got up to the all-time highs. I just felt like the valuation was getting a little bit stretched. I wanted to take some profits going into earnings. But if the stock pulls back tomorrow into the low 90s, I'd be more than happy to buy all those shares back.
Fantastic. Awesome. All right, Jonah, I'm going to bring in a couple other speakers. Anything else you wanted to add?
Nope, all good.
Sweet, and we'll make sure to clip that. I know you'll probably want to send it out to some of your followers that want your thoughts on these. Appreciate you joining.
Thanks, guys. Have a good night.
Absolutely. Have a good one. Okay. Ooh, Jay, getting a lot of background noise from you. Everything good over there?
Yeah, my background. I was muted, so I'm not sure where that's coming from.
Okay. I'm not sure. It sounds like there might be a little bit of feedback. Maybe find a bit of a quieter space if possible. I'm going to go to Stock Talk Weekly first to get his thoughts, so we can pop over to you. And then, Brad, I want to get back to you afterwards, but there's just so much good information. But I'm sure you're enjoying as well. Stock Talk Weekly would love to get your thoughts on some of these names up here.
Yeah, I'll give a few thoughts on Upstart first. I traded Upstart this year. I'm not long on the stock still. For me, I can understand the moat and AI based lending, and people feeling like a new platform in this space can grant you a moat. And obviously, as was discussed earlier, I think by from growth of value, you mentioned earlier that these companies don't disclose the details of the differences in their algorithms or their AI platforms because naturally that's what's driving the competitive advantage, and it's proprietary, and it's understandable why the details of how some of these platforms operate aren't disclosed. But purely from just a trader's perspective, and somebody who while I do have a handful of investing positions, I'm mostly a trader who's just looking for the meat of the value or the meat of the move. And I'm constantly, prioritizing opportunity cost and trying to rotate my portfolio to, new opportunities that I find are more compelling. I think in Upstart's case, an example of this, at least for me earlier in the year, was SPAC Bobby, who's a guy I talk to sometimes, which some people on here might know his account, mentioned to me earlier in the year about Lending Club, and told me to go look at the numbers and just compare them to Upstart and compare the valuations. And so I did that earlier in the year, and I added some in the 20s, and that stock performed very well since then. Obviously didn't have the monster face ripping run that Upstart did this year, but I look at a stock like Upstart, which in a year's time or less than a year's time is up 1,200%. I can understand from a company that's posting quarter after quarter of explosive growth like Upstart did. I can understand how a stock gets ahead of itself, which is just the way the market works. It's a forward thinking mechanism, and people buy into a growth narrative, and they forward project that growth narrative by 2, 3, 4 years. And I think there's a lot of smart people in Upstart. Like I respect Jonah a lot. He always has quality information to give, and I think there's a lot of other people that I would definitely respect their opinion about the growth story and about the potential moats they might have in that sector. But for me, I just view it as a stock that I feel like is overextended. And I feel like, 1,200% run in a year's time to me feels like there's going to be a better buying opportunity. And again, I can be completely wrong, and maybe this is the right time to long the stock and it just rips higher all through next year. That's definitely a real possibility. But, barring that happening, again, from a trader's perspective, it's hard for me to justify, what's left in the meat of the move for Upstart and comparing it to some other opportunities that might be in, whether it's financial technologies or other sectors. And so I'm not a buyer here, even though I do think that was, potentially an overreactive move. I think it could still potentially be a few $billion overvalued at this juncture. And so, for me, I want to see explosive growth, and I understand people saw a beat and, they still see that growth story to be intact. But for me to justify, stock that's up 1,200% in a year, I want to see, either a definitive, overwhelming technology or IP advantage that is just like almost indisputable, which I don't necessarily see with Upstart. Again, some of that might be the lack of either my knowledge or the available detail about their platform versus others. You either need this overwhelming technological advantage, or you need like a growth story that's just overwhelming. I'm talking about hundreds of percent in every category, every single quarter. And so I don't know about the value case for me, and maybe I need to do more work on it, but that's just my general perspective on Upstart. And just on, if I would be a buyer here purely from a trader's perspective, and that I understand that, that narrative or that opinion kind of discounts the investor's perspective on Upstart, which might totally still be valid. If you're looking at it in a 5 to 10 year horizon, who knows what could happen over that period. But that's just my view of it, from an opportunity cost perspective and from a trader's perspective. But what's the other stocks we have up here? SoFi. Yeah, I'm long on SoFi. My cost is relatively low. I bought it a long time ago. I kind of sat through the volatility. I've used the optionality to benefit off of just having equity and holding equity. And my cost is really far down from where we are now. So I feel like I have the flexibility to keep holding. I am also kind of in agreement with everybody said about here about the bank charter potentially being a catalyst or improving their, cost of access to capital as well, which I think is another key advantage. What I am worried about, I guess, just from a multiple perspective is, will people view their bank charter as, an excuse to value them at the multiples that banks trade at, which I think is a potential valuation risk. But maybe does it steer them away from this pure fintech narrative that's driving higher multiples in a lot of startups, and obviously has driven Square and PayPal a lot higher, except for PayPal recently. But I think that narrative's still there for SoFi, and I think they're a young enough company that their business model still has a lot of ability to span out on these different verticals and give them traction to grow revenues. And maybe all those verticals aren't factored in yet. I think this is a business that can continue to diversify rapidly because of how young of a business it is relative to some of its competitors. And I think over the next 5, 6, 7 years, I'm a huge fan of Anthony Noto as well. I don't know who mentioned that earlier, but over the next 5, 6, 7 years, I think they can really diversify their revenue stream. So I'm going to stay long on SoFi. Again, I have the flexibility on the cost of my equity, and I've profited a lot off the options as well, which has helped. So yeah, I'm staying long on that name. Coin, I know we talked about this earlier as well. I expected them to have a better quarter, considering the recent surge of interest in cryptocurrencies. I just thought it was going to drive a better quarter for them. I didn't play the earnings. I also don't have an equity position, so I guess no harm, no foul for me in that with regard to Coin. But it's not a name that I want to own, and I don't know if that's just a hunch or a feeling, but it's not a name that I've ever felt compelled to own. Even despite them being a sector leader and one of the first major IPOs in the crypto space. I'm not sure, that the ability for these exchanges to generate overwhelming amounts of revenue, I'm not sure that equation has been solved yet. Because these crypto exchanges are relatively new. and the volume of crypto being traded is very relatively new. I mean, we only recently hit, a 3 trillion plus market cap for crypto for the first time, which dwarfs the overall market cap of cryptocurrency, back in 2017 or, whatever crypto peak or crypto rally you want to look at. We're absolutely dwarfing the volume. So I would expect these companies, to be making money hand over fist and just blowing out EPS estimates and blowing out revenue estimates, especially when we see this kind of mass sentiment and adoption that's coming to crypto. Even institutions, corporations, ETF exposure is coming. Everybody and their mother seems to be talking about Bitcoin and Ethereum. I expected more from Coin, and kind of disappointing me. But again, I don't know if these companies have really figured out, how do we leverage the millions of new users and this relatively new asset class. How do we leverage it into constant revenue generation, either as exchanges or I don't think even some of these miners have really effectively figured out that, right? Like, what is some of these Bitcoin mining stocks, like, what is the equation? Should they be holding all their assets and just mining endlessly and just using that to drive market value, or should they be liquidating portions of those assets and using it to scale more rapidly? And like, there's just so many questions that haven't been answered, I think, for this whole space. So Coin's a stock I still remain really undecided on. But I did expect more from them regardless, just off as somebody on the sidelines. And then Affirm, I think the buy now, pay later trend is obviously booming. I'm not sure if that's so much so because of the, excess liquidity in the market or, in the economy in general over the last year, or if that's, more so because people just want to be more independent financial decision makers and, not go to banks for loans and this and that. Like, I don't know if this like independent finance movement that's spawning with, especially the younger generation who, I have friends who don't even have bank accounts. They just have like a portfolio and then like, other, they might have a bank account, but they don't have like much of their capital in it. And, they have all these other allocations. And, I think this movement is going to definitely drive some newer trends. And I think buy now, pay later is a big part of that. A huge demographic of the people using buy now, pay later are, the younger demographic, people less than 30 years old. So I don't know. I think that there's a lot of tailwinds for Affirm in the entire space right now. I also think there's a lot of M&A hype, and money that's been contributed by larger, payment companies or financial technology companies towards this trend that kind of like, it makes me feel like it's that pop at the start of a trend that you always see. Whether it's with electric vehicles or any of the other trends we've seen, and especially in the last few years, where you see that pop in hype and money influx and all these M&A deals. And, it seems like everybody's chasing the narrative and then demand dies down a few quarters later. And I don't think buy now, pay later is going to be something that's going to disappear. I just don't think it'll grow at the same rate that it has in the last few years. So, I think that's something to keep in mind going forward. But I think Affirm will probably continue to be, at least for the next few quarters, at least until this trend gets more fleshed out in the market and, until there's more different, competitors that can offer those same services. I don't think the competitive landscape is fleshed out enough yet in BNPL, but as more of these larger companies acquire, buy now, pay later software companies or whatever they may be, or make the necessary acquisitions to vertically integrate those services themselves, then I think you'll get a much denser competitive environment, and you'll see some of these multiples compress on these BNPL companies. But yeah, that's my opinion on the four that you had tagged up there.
Really good stuff, man. As always, appreciate you weighing in. And I thought everything you were saying there was, super clear with your perspective. And I like what you said there on Coin. I think that it's important, right? Because there's a lot of positive sentiment around it, right? It had the run up. But for you, I think, talking about how it just wasn't something that you were just, necessarily attracted to. And that's okay. I think that's something like a lot of people, myself included, early in the trading careers can chase after where those quick returns are, or something that we say, everybody's saying this is great, but I think that sometimes it's important, maybe like just something isn't for you. And I think, with the more experienced traders, perhaps you learn that gut feeling, from time after time, like, oh, this thing burned me, or this, perspective or something like that. But learning to trade what you're comfortable with, I know that you're trading, SPACs and some other areas, and momentum and volume, and you're just like, that isn't for me. I definitely respect that.
Yeah, I'm all about opportunity cost. Yeah, at the end of the day.
Real quick before I go to you, Jay, Brad, you were DMing with me. You had a response?
Yeah, and I think we should make a distinction on Upstart between like someone like me or Chris taking a really long-term approach, and then the trading point of view. So when I say really nice things about Upstart, I don't know, or I'm not commenting on where I think the stock is going to go in the short term, because again, we have had this incredible price action, and I will say, while the stock looks extended from, okay, just look at it from what it's up year to date, its revenue guide has also gone from 350 million to 803 million during that time. And its contribution margin guide has also gone from 40% to 46% in that same time. And it also has a lofty sales multiple around, I think, like 24, 25 times after the dip now. But that coincides with the 25% net income margin this quarter. So a double-digit earnings multiple. So, I mean, in terms of stock extended, I can't really, or I don't really have good insight on that. And Stock Talk Weekly and Gergiven probably are better there. But in terms of how or better at giving you an opinion there. But in terms of how the company is performing, I do not see another stock or another company, another organization that deserves to be extended more so than Upstart. And just about the competitive landscape and just offering just an idea of what it gives bank partners and why it's sticky and why I think it will continue to be sticky. And this is data that I cite a lot of the time, but it's from the Consumer Financial Protection Bureau's percent lower APR and a 27% higher approval rate with no change in loss rate banks. So I mean, that is what they are delivering, a larger, more profitable loan book. And people will pick on the fact that, okay, they haven't gone through a credit cycle, and you're absolutely right. The test for this company will be when things get really difficult on a macro level, and they're very easy right now. But it's not like the COVID-19 pandemic was no demand shock at all. It certainly wasn't a credit cycle, but it was a demand shock of unparalleled proportions. And Upstart's credit held up better than its competitors during that time. So they are battle tested a little bit, a lot more battle testing to go. I think it's really important to highlight the distinction between, I don't know if this is going to be a good stock in the short or medium term. I just think it's a really high quality company, and I think that the stock will eventually follow suit. So differences in time horizons, I think it's a good distinction to draw for people, how a different time horizon or a different approach can lead to having just a completely different view on the same company. So thank you, and I will yield back.
Yeah, no worries, and definitely always want to hear, your opinion on that. And I love the discourse back and forth. Real quick, if you're chilling with us in this audience, 750 plus people, we've been going for almost an hour and a half. Make sure that you're following these speakers up here. If these are companies that you're interested in, they're all extremely well versed with these companies. They do deep diligence dives. They examine them from fundamental, technical, alternative perspectives, follow the option flow, and daily are speaking on spaces where they're giving free information. So whether that's, Jonah, Stock Talk Weekly, from Value, my great co-host, Stock Market News, Gavin, Brad, Jay, they all have a really, really great perspective. And many of them have years and years, if not decades of experience investing in the markets at a very high level. So I can highly, highly vouch for them. And then if you're enjoying these spaces that get held, I think this is the 7th space I've done this week, you can check out the Gav Blacksburg account that's co-hosting with me. Feel free to throw a follow that way. Definitely trying to get that account to 5K. That's where I tweet out some of my personal trades and thoughts along those lines. And I'll be hosting from that account tomorrow with the Benzinga at 1 p.m. when we talk about market chat. With that being said, would love to go to you, Jay, to hear your thoughts on what's going on.
Hey, I only have a couple seconds, but had a question on Coinbase just for the experts on here. The 3Q EBITDA miss of 618 versus 698. Parsing through the revenue miss, there's a retail transaction revenues came in below expectations. So they came in at 1.02 billion versus 1.25 billion consensus. And there's a 16 basis point sequential decrease in retail take rate, which means that, Coinbase Pro, its tiered fee structure, institutional accounts were actually growing and lowering the overall margin. Where is that, how do you view the margin profile of Coinbase going forward? And is, trading in Shiba Inu enough to result in a material change in the company's outlook next quarter?
Business. But kind of speaking to what Jay said, I'm not sure that these exchanges have really figured out how to capitalize on their user bases. Like, I don't think that they figured it out. I don't think that these companies have been around for long enough. I don't think, I think immediately the thought was, accumulating these user bases, we capitalize on that with transaction fees. And that's the obvious answer, I think, but it hasn't really worked for Coinbase in the way that I expected it to, being one of the biggest exchanges in the world and having this massive, influx of retail interest. I expected them to capitalize on it more effectively. And maybe there needs to be, an alteration of the business model. I don't even, off the top of my head, I don't even know what a good approach would be, but there's got to be better ways to monetize off the user bases, because, these companies are all of these exchanges are seeing explosive user growth, and their revenues just aren't reflecting it. And so, I don't have an answer with regard to Jay's question on where I see the quarter over quarter, numbers going for that. But I just wanted to comment on the fact that I really don't think that these companies have figured it out, Coinbase included.
So wait, the question was, how do we think it's going to go next quarter?
No, so the question was specifically the retail take rate was lower, and margins also were hit hard because the tiered fee structure is lower. It ends up being, lower for institutional accounts. So next quarter might be positive because of the Shiba Inu trading, but is that enough to justify buying the stock here if it was a one-time thing?
So what they said is going to happen here is that because, like you said, that because volatility in the quarter was low and the crypto prices were lower in the quarter, it's hard to think about it because a lot of the effect from this quarter, from the SHIB thing, came after the quarter. But overall, I would expect that right now a lot of smaller individual people have been buying SHIB. So I think that, we will see this quarter, next quarter, be really strong in this aspect. I do think over the long term, Coinbase is in the early stages of taking the revenue that they make being away from, or the main driver being away from transaction revenue. They're in the early stages of that. Staking will be a big aspect of that, I would say. That's where I would be trying to focus on where I'm hoping for the growth of Coinbase and where the potential is. As long as crypto is still pumping, though, you're gonna see these exchanges see a nice benefit from it. And I think that the problem that we're seeing in this past quarter was we're still up meaningfully year over year, but quarter over quarter we're down, and just the aspects of it, just the way that when it happens and when everything and when crypto is running. This tended to be a bottom for crypto. A short-term bottom was mostly for this quarter. So I do think that when we see better conditions, we will see that transaction revenue increase.
Yeah,
Thanks.
just one point I think that one point I think that we forgot to mention, or at least I forgot to mention on it, was one thing I did see from the report is that they said that they intend to increase their commitments off future free cash flow to buying and holding crypto outside of the crypto required for the liquidity for the exchange. So I thought that was interesting. So, they're not talking about just holding crypto for what they need for exchange purposes, but taking portions of their free cash flow in the future and allocating those to just holding cryptocurrencies outright. And I think more and more cryptocurrency related companies or blockchain related companies are going to do that. More of these mining companies recently, I know I keep bringing these up, I just trade them a lot, and they're somewhat related to coin, I guess, but they're doing the same thing. Whereas some of them were, mining or accumulating assets and then selling them and using those, in capital expenditures to increase their capacity. Now more and more of them are just, stowing away cryptocurrencies as assets to hold. And I think that's interesting because I think that some of them are trying to, gain sympathy for their stocks to be traded, congruence with the appreciation in the crypto market overall. As the values of these different assets go up and these companies are, allocating, whatever portion of their company that they are, but, portion of their company to holding these assets, I think that makes the valuation narrative for a lot of them interesting. Like, it really depends on your outlook for how much you think Bitcoin and Ethereum and some of these other commonly mined assets are going to appreciate. So I think that's another interesting point that Coin brought up.
Quickly, they bought 180 million worth of cryptos as an investment so far in 2021.
Yep, that's right. Just a follow-up quick question on SoFi. So I think someone had mentioned that they think that the bank charter would be negative for the valuation. My view is a little bit different. I think that the bank charter would allow them to lower their cost of capital materially by over 150 basis points, which would improve NIM. And then when thinking about valuation, I would actually take enterprise value, subtract out Galileo, and then look at book value and compare it to a bank. And when you do that, it's actually not trading at like a huge book value multiple. So it's just one thought. And the question is actually, for Brad, Jonah on Upstart, this is kind of a question, to kind of dispel some of the myths. One thing a lot of investors talk about, and my question for you is around Cross River Bank. Cross River Bank is really, it seems like a conduit. A lot of investors say, well, in 2020 it was 67% of loans and 63% of revenue, and it's come down a little bit from there. But in reality, isn't it just a conduit for hedge funds to buy bonds? And I don't really view it as an individual bank partner, right?
Yeah, for me, so there's two areas of concentration risk for Upstart, and that one, you're right. They kind of serve as a pseudo clearinghouse, and there are a lot of substitutes, and it doesn't really bother me. The one that does bother me is the Credit Karma concentration risk, and that I think it's like 47% of Upstart's traffic comes from there. So that's really the concentration risk that I'm focused on. That's I mean, as soon as I see the 10Q published, I'll control F Credit Karma and see where it shook out. But from the SoFi bank charter perspective, it not only lowers their cost of capital. You're absolutely right. I have similar estimates. It not only allows them to compete more on rates, but it also kind of so they have state mandated caps on how many mortgages they can issue and how many loans they can issue based on their licensing. And when they get federal approval for this bank charter, when they become a federal entity only regulated by 3 federal agencies, these caps go away, these volume caps go away. So not only is this student loan 50% of volume probably going to come back when the CARES Act moratorium extension ends, but that could also serve as another tailwind for that more mature lending segment. So sorry to answer the first question too, but that's kind of where I see concentration risk and how excited I am for the bank charter. I can't comment on how the stock is going to react to the bank charter. I can say with the utmost confidence that I have absolutely no idea. I just think it'll be good for the company.
Thanks. I got to run. My girlfriend's going to be pissed if I don't watch a rerun of The Voice and grab dinner with her. So thanks so much, guys, for answering those questions.
Thanks for coming on, Jay. Take care. From Value, did you have a comment? I saw you come in for a second there.
Yeah, well, I was actually trying to come in when it was about coin, and I'm not a specialist in crypto, and I don't really follow Coinbase very closely, but from really high up. If you look at this, this is a fairly new platform, as it were. And I'm not just talking about Coinbase, but crypto in general, and blockchain and what have you. And I think that you should always, if you look back at platforms over time, think of the internet. You always see that there's a huge spike up initially of enthusiasm, while actually what you can do with it, and I was there at the end of the 90s or even mid 90s. I was quite early with the internet. If you in 1995, if you had 20 minutes or so, you could download a picture, right? And I mean, I think that people often underestimate the second line consequences of those new platforms. And if you look at the internet, for example, the best time to invest was around 2010 or so, when SaaS businesses came up and social media, et cetera, et cetera. So I think with the NFTs, you see some new functionality coming up, but this is just really the beginning, in my opinion, and we will see a lot of things that we cannot even imagine right now coming up, and that's the interesting thing, I think. So I agree there with Stock Talk Weekly that these platforms have not really figured out how to monetize this, how to deal with this, because it's still so new. And who would have thought about NFTs years ago? I think nobody. And you will see new applications coming up again and again and again in the coming years, and that's why I think it's interesting to follow the space. And you'll see a lot of things, and from the perspective of an investor, I don't think you have to be, or you have to have FOMO, because there will be great opportunities coming in this space for years and years to come, probably a decade or so.
Yeah, another point I wanted to make actually on Coinbase was, so I was just talking to my buddy TSDR about it too on the DMs, but if the narrative of cryptocurrencies, especially with Bitcoin and Ethereum, is price stability at a certain point, right? And you want more and more holders in these, ideally occupying, portions of the free float. That's terrible for these exchanges if that's the trend. If the owner-based psychology of cryptocurrencies goes to buy and hold, these exchanges will suffer, significantly, Coinbase and all the rest of them, because they're so heavily dependent on transaction volume and transaction fees. And so if people aren't trading these regularly, the lack of volatility is almost a bad thing for these exchanges. So that's something to keep in mind as well. Like, will the growth and evolution of cryptocurrencies encourage price stability in the biggest assets? Where we won't see Bitcoin going up 5% one day, down 5% the next day, where, maybe it trends up, but, the majority of the float is occupied by long-term holders in Bitcoin and Ethereum, et cetera, which is really from most, crypto maximalists that I talk to, that is the goal, which is, either the store of value thesis or the currency thesis, both of which require more price stability than we've seen, right? You can't have these high beta assets used as either currencies or store of value. So if that's the goal, and if that's where crypto is headed, these exchanges rapidly need to figure out other ways to monetize, because transaction fees won't cut it, because those are going to trend down and down and down. The more that this crypto narrative or the store of value or currency narrative trends up and up and up. So, I think there's a divergence between where cryptocurrencies are headed and where these exchanges think they're headed. The increased adoption in cryptocurrency, or even the increased number of users on these platforms, won't matter if the psychology base around how these assets are traded or invested in changes. So that's another thing I think to keep in mind.
Quickly, just to add on to that, first of all, Stock Talk Weekly's point about volatility is 100% true. That's super important for the exchanges. Literally, here's a direct quote from the earnings shareholder letter. This is Coinbase. They're saying we've consistently indicated that volatility is a key factor influencing our transaction revenue. And right now, transaction revenue is 88% of their total revenue. So one thing I would say, while I was doing the deep dive into Coinbase, it's early days in this process, and that's why I haven't invested in it yet, because I still think there's way to grow it. But that is where Coinbase is focused on, is growing that subscription and services revenue. I don't know many of the other exchanges. What Stock Talk Weekly is saying is 100% going to happen. That's just kind of the natural course of this. So the important thing I'd be watching out for in this name, in the short term, it's going to run when, cryptos like SHIB go bananas, but I think long term I'd be watching that subscription revenue and the services and everything in that aspect, and see if they can really drive home that and get some growth. If that's at 40-50%, I'm much more confident about the long term. Obviously if it's just tracking forward, like right now it's at 12%, if it was growing rapidly, maybe the bar's lower, but I would say 40-50% of the revenue at least would be the goal from services and subscriptions. Tongue twister at the end.
Yeah, I mean, they're going to have to leverage that very quickly. They're going to have to find ways to monetize and leverage that quickly, because I see this continuing to trend as less and less volatile. I know the Bitcoin maximalists will have people believe that it's going to go to 500K by January or whatever. But, I really do think that you're going to see both the upside and downside volatility slow down, largely, especially as more large block buyers and large block holders come into the equation, which, again, is another inevitability. If outside of the store of value versus currency narrative, whichever school of thought you're in on that one, doesn't really matter. But, with regard to the global adoption narrative, to achieve global adoption, you may not need governments to buy the currencies outright, which I don't think you'll see the United States government or the Chinese government ever do that. I think it's too a forfeit of their control over the money supply. But, that being said, if you want institutional adoption, globally, you're going to need large scale buyers who are buying billions of dollars worth of Bitcoin or Ethereum or whatever it may be. And, the risk there then, to me, poses a risk to the entire decentralized system, because, and I hate to be getting so psychological or philosophical about so much of this, but it's just the way I think. If whales come in and occupy, the vast majority of the float in Ethereum or Bitcoin, and I understand, additional Bitcoin will be mined for decades and decades and decades from now. But I mean, of the present float, if, institutions or, billionaires come in and buy massive portions of the float of these cryptocurrencies, are they even decentralized anymore? Or are they just now centralized in an entirely different way, right? To me, the narrative of decentralization is defeated if you have enough large entities that own enough of the float, because then they control it. And then it's not this decentralized fantasy land that everybody thinks it is, where, everybody in the world has a bit of control over it. And, it's the same thing with stocks. In stocks where you have massive institutional interest, they govern the price. They decide the supports and resistances. It's not it's not the broader market. It's not as democratic of a market. The more and more of the float is controlled by the fewer and fewer holders. And so that, I think, is just a massive risk to crypto in general. Not to mention the government resistance, which I think we'll see. I think once crypto's total market cap hits 10 trillion plus, you're going to see a lot more resistance from, the United States government, the UK government, the Chinese government, the biggest governments in the world, who will say, that's enough. We need to maintain our control over the money supply. That's one risk. But I also think this decentralization becoming centralized, I think that's another huge risk. That's more so about crypto in general, though, not coin. Kind of going off on a tangent, my bad.
So with that being said, I think we've hit pretty hard on all of the main stocks that we wanted to talk about tonight. Um, oh, I see Jonah popped off. I wanted to give him a minute to speak for wrap up, but no worries. Okay, so the Stockman or Stockman, I brought you up. Did you have a quick comment that you wanted to make?
I just wanted to speak about I didn't see it on the top four, but I feel like one, I don't know if you guys did talk about it. I don't assume you talked about it, but I'd say one of the most bullish earnings from the day was actually Disney. I don't see many people talking about that.
Yeah, it's a good point. We haven't talked about it. Let's do Disney real quick, and then we'll go to wrap up. What's your thoughts on it?
My thoughts on Disney, if you listen to the call, well, it depends what you're looking at. If you look at the price action, you saw it just dip and die just because of a small revenue miss. But sales beat. They also expect growth in the parks, which they said is going to be like what, potential, what, 60% or something. Yeah, I think it was 60% growth back in the parks. And then they have 99% up since last year on resorts. And then the biggest thing I think they mentioned that most people, I guess, went under the radar was they wanted to create their own metaverse. So um, we've seen what the metaverse does, not only in crypto for Mana and all these other gaming coins. We've seen what it does for Facebook. We've seen what it does for a penny stock like LGHL going 100%. I think that news went really under the radar, and the fact that they actually beat sales and increased subscribers, Disney Plus subscribers, by about 40 million since last year. I think Disney has the biggest opportunity ahead, even though the CPI data X, Y, and Z. The earnings from Disney were probably some of the best earnings we've heard by any tech or major player in the last few weeks. So those are my thoughts on it. I think Disney will be affected, obviously, by the downtrend. This is not financial advice to go buy it or something like that. But I will say that I'm watching Disney for once this downtrend settles out to pick up some leaps and really play Disney long, because there's so much more growth ahead, not only in the entertainment side, but in the parks. And then this, again, if they go into this metaverse land, then who knows where the ceiling is.
Really interesting. Maybe we'll just do a minute or two around on Disney. Evan, I know that we were talking Disney earlier in the weekend with Gerg, actually. Do either of you have thoughts on it?
On
I like Disney
Disney?
for the long term. Yeah,
Yeah, go on.
I wouldn't say that this was close to the best earnings I've seen, even this today or this quarter or whatever. The revenue number, I saw conflicting expectations. The revenue I went with expectations was 18.8 billion. I saw it as a miss. I did see some sources reporting 16.3 billion as the expectations, which would have been a beat. So I'm just going to kind of throw that one out. Maybe I'll give it to you, whatever. They did miss on EPS. Subscriber growth for Disney Plus was, I mean, they still grew, but it was by 2.1 million or something like that from last quarter. The year-over-year numbers are pretty good, but right now they're doing a lot of international expansion on that, which, I mean, for the long term is good. And in a couple years, we'll look back on this and say it was the groundworks for a lot of stuff. But right now, the costs they're charging in those countries where they're launching is very, very low, and that's affect the average revenue per user on Disney Plus. I believe it was down something like 9%. That's going to continue. They are expanding into multiple new markets. I think they said they wanted to get into two X the amount of countries Disney Plus is in by 2023, their fiscal year. So, which is a good thing, but just in the short term, it's going to mess with the average revenue per user. It's going to bring it down, and it'll be interesting on the numbers how that's going to go. The parks was a really great return. I mean, overall, I am very bullish on Disney for the long term. This quarter didn't change anything for me. But from Disney's extremely high standards, it was an average quarter. IMO.
Gerg, you want to talk on it, then Stock Talk Weekly?
Yeah, we talked about Disney all week. The only thing is that don't play weekly options because the stock doesn't move a lot. And now what happened? People bought Friday options and they're gonna cry tomorrow. So before you play options, last movement for the stock. And I think this will be up 2% tomorrow. It should be down 2% for the day. You lose money both in your calls and puts. I don't have any short-term position in Disney, but I do like Disney long-term. And this was expected, right? I think we mentioned about them closing the Shanghai Disneyland for a couple of days due to the COVID outbreak and other negative catalysts. But earnings weren't that bad. I agree with stock market news on that.
Yeah, parks were actually pretty strong despite that. I think it was like a 2x from last year. I mean, last year was COVID, but we were at 5.5 billion. It was okay. But Disney has super high standards. We
No,
need
no,
growth.
I wouldn't say okay. I would say
It was
bad
good. It was good. I think
compared
it
to
was good.
2019.
What was 2019 numbers? Do you have that? Sorry, wait. I'm just gonna stop laughing and let us get to stock talk.
I'm just gonna PM you the entire report.
I mean, there's a couple things I want to say on Disney. I really like Disney long term. You know, I think that there's a pricing issue that's going on with Disney right now. You know, in my view, and I've tweeted about fundamentally why I believe this before, but I see Disney as a $400 billion company at least. It's trading today after the drop, I think 300, maybe a little lower. I haven't checked the market cap today after the drop, but my thing with Disney is I think that the emergence of their streaming business, growth aside, which, they had steady growth. It wasn't overwhelming this quarter, and that was part of the reason for the disappointment. But, the fact that they've just opened up that vertical of streaming, leverage with the amount of content IP that they have. People forget how much content Disney owns, especially popular consumer content. I mean, they own enough brands to penetrate every single demographic market in the country. And so I think leveraging that content, they have not done as good of a job as they can. I think, they need to be dropping a lot more content on Disney Plus than they do, and I think that would help in terms of subscriber growth, a lot more exclusive content. But I think that there's been a pricing issue with regard to, them trying to earn a higher multiple by entering the streaming business, but also being held accountable for that business as the only thing that's driving their valuation, which I think is slightly unfair. And I think the market, kind of reacted that way as well to see the stock down after hours. They're guiding for significant growth in park visitation and revenue from the physical side of the business. Not to mention NFTs, metaverse, other, verticals that they're opening up. Plus I think the Disney Plus thing is something that they'll flesh out. They're a newer company to the streaming space. And, if they're able to leverage their content IP effectively, which I think they will be able to, and, create enough new content rapidly, I think that they can continue to spur exceptional growth on the subscriber base for Disney Plus. And then I also think that parks are going to see a real resurgence, especially next year and going forward. And I think that's really an overlooked part of the business, because I think now, again, people are viewing purely like, hey, if the subscriber growth isn't growing 40% quarter over quarter, then, they're fucking up, or they're sell the stock. I don't view it that way. I view, not only do I view them as a good long-term investment, I think, just technically looking at the chart, that chart's been in consolidation outside of the outside month in March. That Disney chart has been consolidation all year long. It's looking for an excuse to rip. I don't know if we're going to get that excuse this year, but you might get it next year. All of this obviously assuming market health. If we get like a major correction or a crash before next year, obviously that won't happen. But barring that, the chart looks ready to me for a good catalyst. And if you're looking out of it outside of the technicals, I think fundamentally it deserves a higher multiple. I think it's the premier content brand in the world. I think it's the premier, potentially one of the premier digital content brands in the world in the next few years. And they have enough, with ESPN and National Geographic and Hulu and Disney Plus, they have enough arms to dip into that pot. And I think that they can expand, again, just user growth rapidly enough if they keep leveraging their access to all of that content. I'm just not sure. If I had to give one criticism for them, I would say that they haven't done a great job of leveraging how much content IP they have and really putting that forward effectively to, keep driving user growth and keep driving user interest. But if they do that effectively, I think that this is easily a $400 billion stock to me.
So quickly with that, they actually said on a conference call that this is the upcoming quarter will be the first quarter where they release a series or some new piece of content to Disney Plus from each of like the studios they own, like National Geographic, Marvel, Star Wars, whatever it is, etc., Pixar. So they are definitely slowly still, or at least definitely still in the ramp up period of releasing content on Disney Plus. Some of the shows though they released have been pretty great, but we don't got to ramble about that. Loki.
And that's the thing too. People like, don't get that it requires like a lot of capex, a lot of years of production, story writing, casting. It requires time to build out this content, and I don't feel like people are giving them enough credit for how quickly they built this massive subscriber base. Managed to keep the vast majority of it with very little turnover, continue to grow it, and then on top of that, the fact that they just kind of got started just very recently and haven't had the time horizon to flesh out franchises and shows, which they inevitably will do. I think probably in very short order. So, that's a good point, Evan, about them dropping more content. But you just even you rattling off the brands. I mean, ESPN, National Geographic, they have Hulu, they have Star Wars, they have Marvel. Like, what? This endless content.
Pixar.
Yeah, Pixar. I mean, this is endless content. Endless. Like, so many
No, but
characters,
can
so
we
many
all
stories.
agree Disney Plus sucks?
I mean, I have it. I subscribe to it because, like, I like the Marvel movies and I like the Star Wars movies and, like, I like the Mandalorian and shit like that. So,
I
like,
have a
I have
question.
it,
Would
but
you rather pay for Netflix or Disney Plus?
I mean, I
But
have
here's
both, but I agree. Netflix does a little bit better job of just having a diversity of content, or at least a pervasiveness of content where they're constantly, whether it's good or bad. I think the quality of most Netflix shit is pretty garbage, but whether it's good or bad, they have new shit all the time. And I think while Disney's quality content is much higher, in my opinion, and that can change, I guess, person to person, they don't have enough of it. And again, I think that's going to be solved. Like, they're dumping money into production right now. They're dumping money into new shows, new franchises. So once that's fleshed out and starts hitting the digital airwaves, like, I think it's going to drive a lot more subscriber growth. I think most people who sign up for Disney now go to it and they're like, "Well, I've seen all the Star Wars movies, I've seen all the Marvel movies, like, okay, and some people might not. I don't know. I mean, I'm just speculating now, but I see it as something that can just, if they leverage their content IP, which they can do, it's really sitting right there in front of them, but if they can leverage it more effectively, that shit's going to boom. And then they also have their physical business, like their resorts and Disneyland and Disney World, and they have the ability to leverage that as well, and that's going to boom too. It's a reopening trade. It's a digital trade. It's a trade that's trading, in my opinion, at a too low of a multiple, especially versus other streaming peers. And it's also has every legacy brand in the world you can imagine. So much staying power. Disney's not going anywhere for decades and decades and decades, probably longer.
Yeah, the
quickly.
way I look at this is if I had Disney Plus, Amazon Prime, Netflix, the first thing if I had to cancel would be Disney Plus. Then I would cancel Netflix because Amazon Prime, it's almost free, right? If you go and buy Amazon Prime for deliveries, you get that for free. So it makes no sense for canceling that. The first thing I would cancel would be Disney Plus, then Netflix, and Amazon Prime would be the last thing I would ever cancel.
Couple things.
And
One,
if you ask 100 people, almost all of them will give you a similar answer on this.
I don't know if I agree with that, Gerg. So I'm definitely a big fan of Marvel and Star Wars. So I really do
Now,
enjoy the
do you use
content.
Amazon though? Are you
I do
subscribed to
use it a
Amazon
tiny
Prime?
bit. I've watched it a little bit. I do have Amazon Prime, but
No, I
I
mean
don't
for
really go back.
shopping though.
Yeah. Oh, for shopping, yeah, I've used it for shopping.
Yeah.
And I've
So
used it
when
for
you
video.
cancel Amazon Prime, you cancel your shopping subscription too. So would you do that in favor of Disney
But I
Plus?
think that Amazon is a little bit two things with that. It is a little bit different because it has so much else baked into it, and the overall spend that people are
Exactly
going to
right.
spend.
Disney should
It's
offer more
replacing
stuff so
we're
people
replacing
stay with
cable spend.
them.
We're replacing cable spend, which is like $50 or whatever X amount it is. People are going to have multiple services. One thing I do think that is important to consider, though, it's not necessarily like how much value do you get from it. It's how much value do you get from it at the price. Because Netflix is what 3x, 2x the price of Disney Plus, and everything chases in there. Like the value case for Amazon Prime is probably the easiest one to make just because of everything else in it. But the other ones, you really have to look at what it's priced at per month along with the value it delivers. Like Apple TV Plus, it has some decent shows in there, one or two. I wouldn't
No,
run to it.
I
Ted
hate that
Lasso is
too.
fantastic. Ted Lasso is fantastic. Nothing you could say will deter me from that. But it's super cheap, so
I
it's
will
kind of worth
watch
it.
that I will watch it tonight just for you.
Check it out. It is good. It's funny. It's a great show.
I will.
Also, just again, I know we said, but a reminder that Disney owns Hulu too, which has live TV and content. So you may cancel Disney Plus, but they're still going to get your ass on Hulu Plus, which has live TV too. So they're basically the premier multi-faceted competitor in that space. And then again, the whole content idea. If you're an investor, you're not a trader, right? If you're an investor and you see that they haven't really utilized their content that well, in what space will it work the best? Marvel Comics, Star Wars. Where would you think it'll work the best? In my opinion, it's in the metaverse. I think in there you're gonna have people craving what they own, and additionally with the augmented reality also stuff. If anyone's really keen on tech, augmented reality, and in the metaverse watching sports, which Disney owns the rights to like 90% of viewership. Um, yeah, if you're playing long, if you're really an investor, I would really take time and consider, look into all the content they do own, like was Stock Talk was saying. And last thing I want to address too was what I think her name is Evan, actually. I'll call you Evan. But the international reduction in average revenue, they did the same thing in the U.S. to gain market share. They gave free, it was a free Disney Plus with like random things. They gave it for super cheap or free with like Verizon, and they did a bunch of partnerships to give it out. And then obviously they catch you in the beginning, and then they charge you every month, and no one cancels subscriptions. That's already been studied. That like there's like some ridiculous number of when people have subscriptions or gyms or whatever it is, like some ridiculous number of it do not cancel, and kind of just they let it linger some crazy amount. There's some study on that. I read that a long time ago. But you have to give up some, it's incentivizing. So I think doing that on an international basis, especially in countries like India, and like you said, there was some other ones they were tagging along. I guess that addresses content, addresses competition, and addresses international market share. I think Disney's in the best place to add to their multiple. And you don't have many other even Amazon stagnating, if anything, in terms of their growth. Apple is facing a lot of roadblocks in the future, considering all the supply issues and all that. Disney doesn't really fall into any of that. So that's why, to me, Disney's undervalued. And overall, I'm watching them. So once the market health kind of calms down a little bit, I think Disney's going to have one of the, it's positioned to have one of the best futures out of any of these long-term, big name, household name stocks.
One great discussion there on Disney, really intriguing and a lot of good information. We've been running for over 2 hours now on this space, so I am going to move into just a little bit of wrap up, with just talking with people about what else is on their radar. We've obviously had a tumultuous week, a couple of down days, and there's potential for a further slide tomorrow. Regardless, there's always opportunity if you are a day trader. If you are a long-term investor, perhaps you haven't even paid attention to the last 2 days, and that's great as well. And maybe you're just checking in on your companies because, listen, buy and hold, I don't personally believe in. I believe in buy and continuously verify. Even if you are planning to hold for the long term, because your thesis can always change. So with that being said, let's just move into this. Let's start off with Brad. Would you like to give us a few minutes on anything else that's on your mind?
Sure, I'll keep it short. 11 of my 25 companies reported earnings this week. I guess another highlight that I would focus on while we're talking about controversial companies like Upstart is Lemonade buying Metromile. So for those of you who don't know, Lemonade, it's an insurance company. It was a renter's insurance company. It's trying to be an everything insurance company. Very small position for me, very speculative, but I think it has a lot of upside to go along with all the downside. But essentially they were licensed in one state. They were trying to roll out as rapidly as they could, and this Metromile purchase got them licensed in 49 states, and it also got them all the training data that Metromile has accumulated and aggregated and analyzed over the last decade, along with the mounted sensor IP that they have, so that Lemonade really would jump from this period of growing pains where they were going to go from collecting data to get better at quantifying risk and being really shitty at quantifying risk for a long time within the car segment, to kind of jumping to being more of a mature and seasoned player. It was also a purchase at a $500 million EV, and I think one of the interesting things to point out there is 300 million out of that is cash. So Lemonade, it was a little bit of Plant Math tweeted this today, and I thought that it was hilarious, but also accurate. It was a little bit of a cash raise with the equity that they sold, because they get 300 million more on the balance sheet, and again they get this licensing and this data and this IP. So it really seemed to me like Lemonade sort of went to the garage sale and bought car insurance. And I really liked the move. I thought it was savvy. So that was another highlight that I was interested in.
Love it. Thank you, Brad, and also thank you for being on this space. And Brad, you'll be back with us on Friday, I believe, as well at noon, right?
Heck yeah.
Awesome. Looking forward to it. Okay, and real quick, before I keep it moving, just want to let everyone know something that myself and Stock Market News are collabing on. And this is a great opportunity while we're just running through here, getting some information from people to reach out. So essentially, we've created a Google Calendar. And if you've been on my spaces, you might have heard this, so I'll keep it pretty short. But essentially, it's very difficult to know when upcoming spaces are, especially when you're tuning into mine, Stock Talk Weeklies, or Gavin's. There's dozens a week sometimes. So to try to make this all really simple, essentially we've created a free public Google Calendar, and all you have to do to get on it is just slide into my DMs right now. You can pull it up and just shoot me your email. In addition to that, just ask me on the calendar. And then we also both, myself and my co-host, Stock Market News, write newsletters. They're free. They're informational. I keep mine very short. It's about a 3-minute read, and it's once a week. So very simple. And if you want those, just ask for that in DMs as well. But yeah, I think the Google Calendar cannot go understated how powerful that is. With about 700 people on it now, that's how we're able to have really powerful spaces with great audiences and get even better speakers on them. So if you want to continue to be a part of this, just slide in. I see DMs coming in now, so hop on that. Evan, anything you wanted to add to that?
No, honestly, that was one of the best explanations we've had from you. I mean, truthfully, I think it's one of the most valuable things for our viewers, listeners, or anyone who enjoys spaces that we've created. So yeah, just I would like to emphasize that if you enjoy spaces, which I mean clearly you do, we still have 600 people in here after going for 2 hours. Just slide into his DMs. You could come into my DMs as well, and you'll get to the same place. But just send your email when you do to expedite the process as much as possible. But I appreciate you, Gav, and excited to keep it moving. Oh, wait, one last thing. This was an amazing panel of speakers that Gav was able to get here. Just click into their profiles, check all of them out. They all post amazing content. They all came in here and spoke really well. This was a really entertaining 2 hours. Just click into all their profiles, check them out. They're all worth the follows. The same thing with Gav, Wolf Financial, both of them. Much love to them for always putting on amazing spaces. But back to you.
Thank you. Yeah, I see I already got 20 DMs coming in. So really excited to see those. I promise I will respond to each person that is sending DMs here. I spent hours and hours last week going through this, and I'm happy to personally add you to it. Literally, there's so many people on this calendar. When I go into the page, it starts glitching now. And I don't mind, keep it coming, because so many people should have the opportunity to see these. We did one earlier today with Jonah Lupton. We did another analyzing SPACs. Tomorrow we're doing live trading and market talk. Next week we're going to do crypto, NFTs, everything on the investing panel, always for free with the best speakers that you will find on FinTwit. So make sure you're sliding in those DMs with your email, and please make sure that it is in there. Cool. From Value, thank you for staying up so late with us. I can't imagine what time it is even by you now. Would love to hear.
It's 3 a.m.
3 a.m.
Yeah. I have two actually that I follow closely and I own as well, and both had a very pleasant surprise for me this week. The Trade Desk. I'm talking about the Trade Desk and Fiverr, and especially the Trade Desk was a really good quarter, and I think the problem for the Trade Desk has been for a while that investors didn't believe Jeff Green, founder and CEO of the Trade Desk, when he said that they would not really feel the impact of the Apple IDFA changes, policy changes. You know, and especially when you saw Facebook and Snapchat and all those other companies, even Peloton, refer to the IDFA changes of Apple as a reason, to not meet their revenue estimates. It's really great to see then that the trade desk, that Jeff Green was right. He has actually invented the ad exchange. He's really great at. I have been following the trade desk for quite a while now, and it's amazing to see that each time if he says something, if he makes a prediction, it always comes true. It's incredible. For example, he said, "Oh, but Apple will postpone the IDFA changes." You'll see that was last year, and they did. And Google will postpone cookies, the third-party cookies. Phasing them out. So and they did, and I think the big surge in the stock price that you saw was not just the great quarter, but investors finally believing Jeff Green that we don't have any problems with IDFA and we will not have any problems with third-party cookies as well when Google phases them out. So that was one that I wanted to talk about for a while. And then the second one was Fiverr today, which also had a great quarter, I think. The stock got whacked in the last quarter, and 25% because they lowered their guidance by 7%. And that's how it goes in the stock market, of course. But I think that the CEO, founder and CEO, Mika Kaufman, had a great explanation, in the last quarter, why they lowered their guidance. And that explanation was simply called hyper seasonality, which means that, because we were all in front of our computers and our screens so much, once the lockdown was over, we wanted to get out. And that was what was definitely the case for Fiverr and quite a lot of other companies as well. And you see now that they guided for the rest of the year with that hyper seasonality, which I already thought was very conservative, because probably I thought, well, probably maybe the next quarter, so the quarter they just reported, but the fourth quarter, that will be back to normal, right? And they did better than I had expected because of summer months. That's not the moment that you think would see them come back to their bigger than expected growth, and still they did. And if they did 40% extra revenue on top of the 73% last year. So I mean, some people still might think this is a COVID play, but it's not, and I think it's well positioned for a long-term trend. And also, if you compare it to Upwork, one of the things that I'm always fascinated by and impressed by is their take rate. So Upwork has a take rate of about 12-13%, I think. Maybe it's a bit higher, not that much. And Upstart could bring up its take rate again from 27% to 28.4%. So, and I think that's very impressive. And gross margins of almost 85%. And it's still quite a small company. I think it's about 7.5 billion or so market cap. So, those were two that really caught my eye this week.
Awesome. Thank you, Chris. Appreciate that. One more thing real quick. In addition to the Spaces calendar, which is great because it gives you the alert to know that it is, if you don't want to have to click into the profile and you want the space to show up at the top of your timeline, just make sure you're following the co-host over here, Stock Market News, and the Golf Blacksburg account. My spaces were crashing from the Golf Blacksburg account, but I typically host from that, and I will be hosting from that probably a bunch next week, as I won't be traveling throughout the week, so maybe like 10, 15 spaces. So as long as you're following that, you'll see the spaces at the top of your account. With that being said, let's keep the ball rolling. Gerg, any final words?
Yeah, stop buying trash at high prices. I would go after SOS. Look at what happened. I want you guys at $14. It's just a Chinese scam. If you go at the actual office, it's a Chinese restaurant. So stop following to the bumpers and to random penny stocks, especially if they're from China. So do your own duty before you buy any stock. Even UPST, even whatever I mentioned, don't buy it blindly. Look into it yourself before you buy in.
Yeah, 100%.
That's all I got to say.
Yeah, I had people like fight with me about SOS in the comments, and I just did not understand their
Yeah,
arguments.
I thought you were there, right? We had spaces back in June, July. We're talking shit about SOS.
Even earlier
You
than
were there,
that.
right? I think.
Yeah, like
Yeah,
even earlier than that.
at
Like
$10. Yeah,
people were like fighting with me. I was like, hey, listen, I'm not gonna fight with you about it. Feel free to hold it long term. Like that's
bro. The same people are in my DMs crying. I lost this. I'm down 90%. I'm down 80%. What should I do? What should I do? I'm like, no, go, get off. Go off.
life goes on. All right.
Yeah. I mean, yeah.
Appreciate you, Gerg. Cool. Stock Talk Weekly.
Yeah, what's going on? Yeah, so I mean, I gave like a huge spiel on all the stocks we have listed up there. So I won't bore anybody with repeating my opinions on Upstart, SoFi, Coin, Affirm, but with regard to just trading for the week, I'm going to be watching SPY in the morning and just seeing if it can retake that 435 level. I think you need that for some more stability. Outside of that, there's a couple things I'm looking at. Obviously, I'm looking at RDW. For anyone that follows me, they know I'm watching that all the time. That's my biggest position. Well, was my biggest position, but after the recent drop, it's my second biggest position now. But I'm looking to see what they clarify if they re-announce their earnings date. I liked the after hours reaction to the explanation they gave, which was basically that it was an accounting error. Anybody that knows about these private equity roll-ups, what happens a lot of times is one of the subunits that they acquire, there's an accounting error in terms of integrating the data with the larger company. And so, you see that sometimes. It's not exceedingly common, but you see that sometimes where companies will delay earnings because of that. So I think that's what you saw with that stock. But obviously, it's still a speculative position for me. It's a new position. So, I think you said this earlier, Wolf, but just about, all investments for me, are always, I check on them constantly to see if they're fulfilling the narrative that I believe in. So, I'm going to still pay attention when they do report earnings, if they're guiding for the right numbers and, if they're still going to hit those 2021 projections. So I'll be paying attention to that. Another one I'm paying attention to is a sympathy trade to the Rivian IPO that I took today. It's a stock, ticker TEN. So they recently had a bad quarter. Their Q3 results weren't great. They missed on EPS and they lowered guidance for the rest of the year. But it's a stock that I was looking at it just fundamentally, purely off the recent report. It's an electric vehicle drivetrain and suspension supplier that is trading at a 1 billion market cap with 16 billion revenues over the last 4 quarters. Um, it's not a stock that I necessarily want to own for the long term because again, they did have, a bad quarter recently and they've lowered guidance for the next 2 quarters. So it's not a stock that I want to invest in and own long term, but it is a multi-day trade for me. I'm looking for a little bit more volume in the market to find it. I think it can trade up above that 15 range, which is what I'm looking for. I got in today around 1240. So, 1260. So, I have a little bit of a cushion here with it trading at 1340 after hours. But I'm looking for a move above 15 there. I think the Rivian IPO today, so much liquidity got injected in there. I think you might see that correct a little bit over the coming days, and some of that liquidity go try to tag some of these sympathy plays. So that's just a sympathy trade for me. And then I'm also looking at Tesla, curious about the reaction now that, Elon disclosed those sales today. The stock was up like 2.5% after hours in reaction to that. So I want to see if Tesla can potentially resume the uptrend. I'm going to be watching it. If I feel like it's confirmed resumption of the uptrend, then I see it probably going to 1,500. All of this again is barring a market downturn. But in that case, I'll probably get back into calls. Obviously, I have Tesla equity, but that's a long-term position. I've had it since 2016, so I'm not touching the equity. But on the optionality side, I'll be getting into calls if I feel like it resumes the uptrend that it was in before the recent correction. And then outside of that, I'm probably going to continue accumulating DMYQ. If SEAH goes back below 1090, I'll add more there as well, although I already have a large position. But that's what I'm watching for now.
Awesome. Got to get me some more DMYQ. Nothing like it. I'm excited for, especially with that management team. Okay. Brad? Or Brad, did you start us off actually? I'm not
I
sure.
think I went.
You did.
But if
Sorry.
you want to just chat, I'm down to chat for a little. No, I'm kidding. Yeah, I went.
Yeah, it's okay. This is my 5th hour of hosting, 6th hour of hosting today, so it starts getting a little hazy.
Yeah, you are what they call a machine, my friend.
I appreciate it. Still got to spend about an hour after this putting people who DM'd me into the calendar and the newsletters. So that'll be fun. Feel free to add on to that pile anyone who wants to slide into DMs. I don't mind. It's okay. I just throw in some podcasts. Okay. With that being said, I think we hit all of our planned speakers. Evan, did you have any other comments you want to make?
Quickly, I'm also watching the Disney event on Friday. But yeah, that's it. I'll keep it quick.
Okay, no worries. Awesome. Well, thanks everybody who hung out with me today. This was really fun. We did an hour and a half this morning with Jonah Lupton. Then we did 2 hours, an hour and a half with the SPAC, the SPAC ones. Big shout out to Angie at Lovely Trade, who's already sent me the recording for the 5 p.m. EST one. I have it uploading to YouTube right now, as well as to all other ways that you can listen, Spotify and everything. If you want to listen to recordings of spaces, just go into the link in my bio. This is brand new. I just added it yesterday. I've now linked the YouTube, the Spotify, I think the Apple Podcast, everything's in there. It's distributed on every platform, so you can check those out in there. And you can also check out the rest of the Wolf services, the app, all of the goodness. With that, wishing health, wealth, and success. Very excited that we got so many people in here for so long today. And mark your calendar for 1 p.m. EST tomorrow. I will be on with Benzinga, as well as several day traders, Juicy, Exclusive, and a couple of others that do stuff with Benzinga. And we'll just be running through kind of the most popular stocks of the day from Benzinga, stuff that's trending, some news stories, maybe some live trading, maybe some of these guys that are on here will pop in. I think it will be a really good time. Take care, everybody. Have a great rest of your evenings. Get some good sleep, and wishing you all green days tomorrow.